As India now becomes the fifth biggest economy of the world, the Indian startup ecosystem has played a great role in the same. However, the startup ecosystem couldn't have achieved its success without the support, guidance, and investment of the country's VCs. Today, we have one such VC with us, founder and managing partner, IvyCap Ventures, Mr. Vikram Gupta.
Thank you, Nihal. Thanks for having me here.
Thank you very much, sir, for giving your time for speaking with ETH Insights.
Mhm.
To begin with, I would like to ask you, what would you want our viewers to grasp as the vision and mission of your organization?
As a VC fund, venture capital funds usually um, try to make investments at early to growth stage in companies and usually try to build very large organizations, and typical vision is to actually build substantially multi-bagger companies in your portfolio. And that remains the vision of any VC fund. But I think when we started IvyCap, we had a very defined, clear, and differentiated mindset of setting up IvyCap, and that was actually, making the VC model, the venture capital model, as the core engine for creating value in early stage to growth stage startups in India. But the bigger excitement comes from the fact that once you create those companies, the profit that you generate, I think there's an opportunity to plow back that profits or part of the profits into our education system to help multiply the impact of that profit by strengthening the base of our entrepreneurship and research across the educational institutions of the country. So, if you ask me personally what is driving me at IvyCap, it is that give back that comes from the profit of the venture capital investments and creating a multiplier effect in the educational institutions. And we are quite fortunate that over the last 12 years, we've actually been very successful in building that model and building a very large ecosystem that is actually doing exactly what we meant ourselves to do right from the beginning.
Sure, great to hear that. And as you spoke about the journey over the last 12 years, the Indian startup ecosystem has gone through its own journey. From the time that funds were readily available to now, as we hear about a funding winter, how has the journey been, and what are some of your key takeaways from this entire duration?
It's quite interesting, in today's market, it's very easy to say that so funding winter when you compare with the years like 2021. Of course, we've seen 44 unicorns only in that particular year, and there was a reason why that happened. But I think if you compare 2023 with 2012 or 2011, I think you'll see a very different picture.
Sure.
So when we started, in fact, when I started conceptualizing IvyCap, it was 2010. At that time, there was hardly any domestic capital funds out there. There were hardly any funds out there. Today, you have over 1,200 venture capital registered funds in India, as what I'm told, as per SEBI data. So, from almost 6 to 7 funds at that time to almost 1,200 funds, that talks about the growth which has happened in the ecosystem, which is good, I think, for the ecosystem, because for entrepreneurs who are trying to raise capital, imagine in 2010, 11, 12, they couldn't go to too many options. But today, at least, they have a substantially large number of options, not just these VC funds or PE funds who they go to for fundraising. There are also large number of angel platforms, angel investors who are investing at very early stages. So I think that is good for the entrepreneurs of the today who are not struggling to raise seed stage capital especially. But I think the funding winter is more relevant to people who are looking to raise later stage capital. If you're trying to raise a Series B or a Series C onwards, there are hardly any 50 million, $100 million checks that are happening, and that does have some trickle down effect on the angel and seed funding as well, because obviously when the late stage rounds stop happening, it does have an impact on the angel investments as well.
Of course.
So if I look at 2011-12 and look at 2023, there's a sea change in the things that have happened. On one side, we've seen the number of entrepreneurs in this country. At that time there were a few hundreds startups. Today there are 100,000 startups that are registered with DPIIT. As I mentioned, there were about 6 or 8 domestic venture capital funds. Today there are more than 1,200. At that time, regulations were very, I would say, early. There were only venture capital funds. Anybody who would go and register for venture capital fund or even private equity fund or as a real estate fund, they were all called VCFs, venture capital funds. The regulations changed in 2013. 2016 January, when government came with a startup policy, that again substantially changed the whole game for the ecosystem. And I think the government has done a lot as well in terms of trying to reduce hurdles for startups and trying to come up with things like Gift City to bring in dollar capital through a single channel, creating a zone within India itself. And a lot of taxation policy changes have also happened over this time. We've seen there were tax havens earlier. People could invest from particular regions outside of India and get the entire tax benefits. We've seen what has happened in Mauritius, Singapore and other geographies, and I think a lot of that is now gone. So in a way, it's becoming more and more fair play ground. Of course, there's a lot more to be done from regulations perspective in terms of this asset class is still struggling with respect to getting a lot more capital. But that will happen, I think, at least directionally. We are seeing that there is an effort going on to encourage more and more capital going into this asset class.
Sure. You very rightly spoke about the fact that how patterns of funding and sources of funding have changed over the years. However, one thing that still holds true is that in the entire VC capital that we have in the country, only 10 to 15% is from Indian sources. Remaining still largely comes from or in the form of US dollars, so to say. What are your views on that?
Yeah, this is a little unfortunate actually. I mean, I started raising funds in India in 2008, even before IvyCap. My first fund I raised after the crash of 2000. Yeah, it's in 2008. I raised 400 crores, all in the domestic market. Dollar used to be 40 at that time, so it was $100 million in dollar terms. And I raised that fund from 32 Indian institutions. And then when I started IvyCap, first fund was 240 crores, all domestic capital. We had 15 institutions in the first fund itself. Again, then 530 crores and then 2,000 crores. So our capital is entire domestic capital. So I've seen domestic capital over the last 15 years. And I've not even made an attempt to go outside of India to raise dollar capital. So many times people who actually talk to me, they find it a little amusing how you could actually raise such large funds, all from domestic investors. I think, domestic investors have matured over time. But as you rightly said, as a proportion of the total capital going into this asset class, it's still about just 15% of the total invested capital in this country. And there are reasons for that. In the year 2011-12, when I was raising a first fund at IvyCap Ventures, the startup was a bad word. I couldn't go and pitch to an institutional investor and say, hey, put money in this fund and we'll invest in startups, because for them, startup means huge risk, which means money is not going to come back. And they'd never seen money coming back in venture capital investments. So the mindset was very different. So to be fair to the institutional investors and family offices and other investors who now investing in this asset class, they had never seen a full cycle exit. I think the exits have started happening only in the last 4 or 5 years, and substantial exits have started happening in the only last 2 3 years. Especially funds like ours, we've given a substantial exit in the first fund, for example, very close to 3x already. Wonderful. In terms of cash returns, we've already given back to the investors, with a few more investments still out there, one of them going IPO. So I think the returns speak for themselves. Fund 2, again, we've already returned 40% of the principal within 2 years of investing. So that gives a lot more confidence to investors. So when you actually have performance like that is when more and more capital starts coming in. So the same thing might have also been true with the dollar capital. In fact, a lot of dollar capital was also waiting to come to India, primarily because one of the biggest questions in India was, where are the exits? After what happened with Flipkart, people saw substantial exits in Flipkart, and a few other, we saw what happened in 2021 with the IPOs, which that particular year was very good for IPOs like Nykaa, Policy Bazaar, and others, where investors got very, very good exits. Of course, times change after that, but I think the point is that the market in India has demonstrated that there is huge potential in this market if you invest in venture capital, early stage, growth stage investments in this asset class. But it's the percentage is still small if you look at it as a bigger picture. But I think if you compare with what it was 10 years ago, I think the growth of domestic to dollar as the ratio has been quite phenomenal. Sure. So I look at it from the positive side perspective, and I think which means that this percentage of 15% should grow further, hopefully to 25 to 30% in the next 5-6 years itself. And that to me is a pretty substantial improvement, because the overall investments will increase. It's not just a double of what it is today, because you will see total investments increasing substantially. It will grow to more than double of what it is. Sure. So that's what I'm expecting.
No, we hope for the same. As you know, I think people across sectors are bullish on the Indian growth story. And like you very rightly said, the contribution of domestic capital, the VC system, will most definitely go up. Be it for a student or an employee, the relationship that they have with their respective alma maters is extremely important. How has the relationship between IvyCap and your alma mater organized institutions, this mutually beneficial relationship, if I may say so, how has this contributed to the growth of the Indian startup ecosystem?
So I think there is a background to this. There's a history to this. When I started IvyCap in 2011, that time, the whole idea was about investing in Series A, being the first institutional check. Sure. And investing in this asset class is all about investing in people. And when you invest in people, there is a lot about a trust that you need to build with each other. An entrepreneur needs to have the trust with the investor, and the investor needs to have trust with the entrepreneur. And the fundamental driver for that was, a relationship which actually is connected through a common bond, right? So it's just like siblings always stand for each other. You try to support your siblings, right? Same thing when you come from the same alma mater, and even if you've not met this person before, and this person tells you that you're from the same college, there is a natural instinct to somehow support that person for whatever they're trying to do. So with that thought process, the idea was to really start with the IIT alumni ecosystem, because I come from IIT Delhi myself. The idea was to reach out to the entire community of the IIT alumni, which is fairly large. And if you look at some of the data points there, 500,000 alumni around the world, 20% of them have been entrepreneurs at least once in their careers, 111 unicorns that ever became unicorns. Almost two-thirds of them are founded by the IIT alumni. Even globally, if you look at the number of unicorns, there are more than 1,200 unicorns globally. And if you rank them in the order of the background of the founders, you will see that IIT alumni founded unicorns globally will rank number 4th. So there is some very interesting story there, so which means that the people coming from similar backgrounds, and especially when we looked at the IIT alumni as the starting point, we saw an opportunity to start looking at them as potential investment opportunities, but at the same time building an ecosystem of mentorship and give back. So in the first year itself, we reached out about 75,000 IIT alumni, basically asking them 3 questions. Number 1, would you invest in this fund, which is targeted to be 200 crores as the first fund, or do you have something that we can invest in, or give us 1 day of your month for mentorship and we'll take it contractually. We received almost 25,000 responses. Wonderful. In a very short period of time. People just saying, very happy to give you 1 day of the month, and that was the minimum they said we could do. And what they liked about the whole thing was this, we had stated very clearly upfront that a substantial part of the profits that we are going to make as fund managers, we are going to give back to your respective alma mater. So interestingly, before 2019, when we were successful, in fact, I personally pushed the system hard to set up India's first endowment fund at IIT Delhi, which was launched by the Honorable President at Rashtrapati Bhavan. Before that, India didn't have a single endowment fund on the same structures as in the US. So, which was very sad actually. If you look at the US endowments, and rank them by the size of the endowment, the 100th rank will be $1.2 billion in size, right? So, I mean, if that's the size of the endowments the US universities can gather, IITs as an example, have created so much value. Why is there no endowments? So 2019 onwards, this passion started building up. It kind of took some time. I think from 2011, people started at least understanding that something like this is possible. 2017, when I had my 25th year reunion at IIT Delhi, I excited my batchmates to contribute at least some token money to put as a seed for this endowment fund. And then finally in 2019, we were able to get this fund off the ground with the Honorable President launching it at Rashtrapati Bhavan, where they invited me, my family, the IvyCap team, initial set of alumni who had contributed to the fund. And post that, of course, there was a very strong connect that people could see with this endowment fund, and IIT Madras, IIT Kanpur, IIM Ahmedabad, they all set up their endowment funds on the same template. But to answer your question, when they see that they're doing something which can actually contribute some value back to their alma maters, so I'm sure many of us who studied in Indian colleges, when they go back to their college after a long time and they go back to the same hostel, they feel very sad actually, because they don't see any infrastructure improvements. They see the teachers having a similar issues. They see very similar kind of challenges that they had faced at that time. So, this is a very common story across many of our Indian universities, where, we pay hardly anything as a fraction of what we get even as a first year salary out of, when you graduate from college. And, during your entire professional careers, even if you want to give back something to your college, you realize that there is no mechanism to do that, because there is no structure, there is no proper team, there is no process there is no reporting mechanism, there is no compliances, There is no tax benefits in colleges outside of IITs. So that's kind of a bit of challenging stuff, where the government is also realizing now that they need to enable this mechanism of accepting money at the endowments. And I personally have been driving this agenda at various government forums to drive enabling structures, whether it is alumni from outside of India wanting to give money in dollars and enabling that through a proper FDI kind of a model, or individuals wanting to give money back to their respective alma maters and not having to worry about, you know, how these things will be managed and how the tax benefits will accrue to them and things like those. There's a long way to go, but I think we have actually achieved quite a bit in terms of at least getting this started. And I'm quite humbled by the fact that the current Honorable President also invited me and my wife, along with 10 other philanthropist couples at Rashtrapati Bhavan just last month, to recognize the fact that this initiative is important for the country. So I think I'm quite excited that this is going to the right direction, and I'm quite happy that we are able to make very small contribution towards making this happen.
Sure, sure. Throughout this discussion, one thing that stood out for me, be it the fact that you started with investing in early stage startups, or the fact that your key focus was on startups seeking Series A funding, or about how you really want to give back to your alma mater now, is the entire feeling of giving back to the society. And I believe that's the best sign about an individual who's made it big in the world and now wants to help others around them. IvyCap too has one such program, the IvyCap Give Back program. As we now conclude the discussion, we would like to speak about the same and have our viewers know more about it.
Yeah, I think this is important, and in fact, when people learn about what we are doing and what you've done already, they actually get encouraged, and I'm quite. I feel really happy to see that some of the other funds have started asking us, if they want to replicate what we are doing, how should they go about it? So that makes me feel very good. So I'll tell you what we've done. So just to give you some numbers context here, right? So we raised about 240 crores, and we are expecting that to become almost like a 3.5x to 4x as an outcome. And typically how this works is that the profits that we get in the fund, 20% of that comes as carry, so-called carry to the fund managers, which is the incentive that VCs work for. It's a standard venture capital model around the world. Now, out of that 20%, we've decided to carve out 25%, especially for Fund 1 and Fund 2, Fund 3 onwards. We perpetually, now as this fund size is increasing, we said that 10% of our carry will perpetually go now back to the endowments or to building endowments across the IITs and the IIMs and other educational institutions. So we've now, Fund 1 itself, we've already now, we're talking about that carry amount amounting to already more than 100 crores, which is already there. And of course, as more and profits come, that amount will increase further. And 25% of that is 25 crores plus already, right? So which is an amount which has been carved out for giving back to the respective IITs and IIMs. Now, the way it works is that on one side we have educational institutions, and from an LP perspective, we have various financial institutions who invested in our funds, and on the other side we have various alumni who've invested in our funds. Now, let's say an alumnus puts a crore out of, let's say, 200 crores, so there's a 0.5% contribution to the fund. Now, the 25%, that 0.5% of that 25 crores goes to that person's respective alma mater on behalf of that alumnus. So effectively, there are 20 such IIT Delhi alumni who put together, let's say, a 10% of the, contribution. So, that 10% of 25 crores comes to 2.5 crores. That 2.5 crores therefore goes to IIT Delhi on behalf of these alumni who are contributing back to their respective alma mater. So, this concept encourages more alumni to, participate in this model, and in the process more and more capital goes back to their respective alma maters. So I'm very happy to say that, there are about 17 educational institutions that we've already tied up with. In fact, overall there are 23 IITs and there are 13 IIMs. We are in the process of closing, MOUs with all the remaining institutions for that give back. We have already transferred a significant part of the profit back to these educational institutions, and the rest of the part is going as we speak. But I think, in certain cases, some of the institutions might have received money only coming from one single alumnus. So that capital give back might be very small, and the educational institution might think that, why are you giving me such a small amount? I think the important part is that the whole idea is to create an enabling structure.
Very true.
And so that there is a flow that gets established. It's like almost like a pilot. And once you created the enabling structure, the team around it, and you opened the channel, and this is a perpetual capital that start building, and also encourages. I think the idea is not just kind of, counting on the capital that is coming from this channel. This actually sets examples for the rest of their alumni to showcase that, look, this is how this fund is doing it, and the only reason it is doing it is because it wants to give back to the alma maters of the people who want to contribute. This actually creates a kind of a satisfaction in the minds of the people who are giving back, but it also creates a kind of curiosity in the minds of people who are not yet giving back. They might want to give it back directly to the institutions through this structure, or if they preferred, they could come through us, our structure. But the whole idea is that it encourages very strong sense of connecting back to your alma mater and sense of giving back. I think I personally believe that, if we continue on this path, India's endowments will be far bigger than what US endowments have done, because the speed of endowment gathering in India will be much faster through this model. If Harvard has taken over 100 years to reach over $50 billion of endowments, I think an IIT Delhi may take much less than 100 years to reach that number, is the point I'm trying to make. So I think hopefully the 100th rank university in India will also be more than $1 billion very soon.
Sure. On that note, it's very, very heartwarming to know the role that IvyCap has played in the growth of the Indian startup ecosystem, and how, the organization and you yourself leading from the front are constantly giving back to every stakeholder around you. Thank you very much, sir. Absolute pleasure to have this conversation with you.
Thank you, Nihal. Thank you for having me here. Thank you.